Anyways, let's continue.
If you are a whole life insurance salesman, you might want to stop watching right now. I'm just going to keep trashing you guys. I'm sorry. I kind of feel bad. It's just really easy. Oh, wait, your whole life insurance salesman is back. He wants to try to convince you one more time. He wanted me to mention that these whole life insurance policies are a secret of the ultra rich. They don't want you to know about. Billionaires and even banks use this tool to build generational wealth. Don't you want to do the same? Well, there is some truth to this. It's true that billionaires and banks sometimes use these policies, but let me tell you why. It's because they already have lots of investments that could potentially make more money. These billionaires maxed out their IRAs, maxed out 401ks. They have real estate investments. They have businesses. They have all these superior investments to a whole life policy. They invest in whole life because they're happy to have a small percentage of their money, making 3 or 4% on average, as a diversification to their investments that make more, but might be more volatile in the short term. But you're not in the same.
Wrong. So you don't buy whole life insurance for the internal rate of return. Not usually, anyways. That's part of it. Okay, but we buy whole life insurance because of all the other benefits that we get. In my particular case, I wanted to be able to build wealth in multiple places at once. Am I excited about 4%? Not really, but I think that's really good for a safe asset. Okay, but here's the thing, guys. The biggest purchaser. The biggest purchaser of whole life insurance. Take a wild guess who that is. It is banks. They buy billions and billions of dollars of whole life insurance every single year. It's considered tier 1 capital on their balance sheet, right? So that should be a little bit of a clue. Like, just because they do that, that doesn't mean we should automatically just go buy as much whole life insurance as we can. But ask yourself why. There's a number of different reasons why. We won't get into it in this video. All right, but banks do buy a lot of whole life insurance. It's very interesting. Now, here's where we would agree a little bit. Like this whole thing about the secrets of the rich. Like I'm not a huge fan of that marketing tactic. It's just, for me, it just like overhypes things. Like, we don't need to overhype stuff in order to put it on people's radar and help them determine if it's going to be a good fit for them or not. For me, I like to just explain the benefits. Here's how I'm using it in my life. And if that sounds good to you, then maybe we can have a conversation. Maybe it makes sense to. All right. It makes sense to at least explore it. But yeah, like the secrets of the rich. I mean, the rich do use whole life insurance. There's a great book out there by Garrett Gunderson called The Rockefeller Method. Absolutely go read that book and see how the Rockefellers have been able to build their dynasty. A big part of that is because of whole life insurance, and using the death benefit from these whole life policies puts that into a trust. It buys more policies on the next generation, and the cycle just repeats itself. So it is a really powerful legacy asset, right? So yeah, I mean, banks use it, billionaires use it, but it's not like they're not buying it for 4%. They're buying it for all the other benefits that it provides. So don't get hung up on that rate of return, guys.
Position. You need to max out all those smart investments like real estate, IRA, 401k, and businesses that you run before you should even consider whole life. And really, I would still not use it. 99% of investment advisors will tell you to use term life insurance and stay the hell away from whole life. And the 1% that don't are the ones that want these damn commissions. I'm not going to blame them. I'd want them too. If you're still not convinced, would the fact that 80% of people who purchase a whole life insurance policy surrender it prior to death concern you? What does that mean?
So
They basically change their mind and cancel the policy. It's kind of like a mortgage. You have to pay large payments to keep it going. And some people either realize it's not worth it or can't afford it. When you surrender it, there are penalties. It can also sometimes create a taxable event. It's kind of like trying to get out of that 1-year gym membership you're not going to use anymore, except 100 times more expensive. Oh, there's a lot more crap, but you get the point, and I'm just too late.
All right. Yeah, so he's going to wrap up there. I do want to pull this up before I forget. And then so how does people surrendering a policy make the policy a scam? How does that make whole life insurance a scam? I don't understand. They probably had maybe unrealistic expectations about what this policy was going to do for them. They weren't taught how it fits into their overall wealth building plan, because a whole life policy, when you set it up right and you're using it right in your life, and you're being very intentional with it, there's really no reason to, sorry guys. My internet has just been really bad lately. There we go. There's really no reason to surrender it, but just because somebody surrenders it doesn't mean it's a scam. Again, that's just, that's not a valid argument for why something is a scam. People cancel stuff all the time. How about this? You're talking about 401ks, IRAs, investing in the market. The fact that if you look this, like I've done videos on this, guys, if you look it up, the average 401k balance for the age demographic of 55 to 64 is, depending on who you look at, between like $230,000 and $270,000. How are you supposed to make that last for 20 to 30 years of retirement? Does that mean the 401k and investing in the market is a scam because the majority of people don't have anywhere near enough money in their 401ks or retirements, or these amazing investments that you're talking about? Does that mean it's a scam? Of course not. It comes down to how the person's using it. How does it fit into the overall wealth building plan? Maybe instead of making all of these investments, maybe they should invest back into themselves first, increase their income so they actually could put a decent amount of money into these things. There's a lot of different directions we could go with that. All right, but it doesn't mean something is a scam. Anyways, he talked about the commissions. Again, I wanted to bring this up, a little calculator that I have. And to his credit, he's actually done a video on investment fees as well, and how like that can extract a ridiculous amount of money from your portfolio. So I would go onto his channel and watch that. I've done videos on this too. But let's take a look at how bad these commissions are compared to the investment fees that most people pay within their 401ks, these mutual funds, etc. All right, just so we can get some context here. So I used the numbers for my first whole life policy where I did a front load of 120,000. I'm paying 25,000 in premium. After that, I'm not on the hook for that. I have a lot of flexibility there. That's a separate video. All right, but let's take those numbers. The whole life commission, I think, is actually a little bit less than this. But because, again, I lowered the base premium and increased paid up additions, the commission was much lower. All right, now, if I did 100% base premium on $120,000 front load, that would be a six-figure commission. Pretty close anyways, depending on what their commission rate is, okay? But the first year's commission was only $5,400 on a $120,000 front load and a whole life policy. Why is that? Difference between base premium and paid up additions, okay? Now, let's continue. There's ongoing commissions, like renewals and stuff, usually for 8 to 10 years on a whole life policy. Every company's a little bit different, but it's minimal. It's like 1 to maybe 2 or 3%, depending on the agent. All right, so we've got a whole life commission of $634 on the $25,000 moving forward, for a grand total after 10 years of $11,142 in commissions on the whole life policy. Now, let's take that 1% investment fee, which I think is being very generous when you add up all the fees, not the ones that are just disclosed, like the management fee or whatever, all the fees in a lot of these 401ks, mutual funds, etc. I think it can reach like 2%. But let's use 1%. Okay, let's take the same 120,000, and we're not even going to include the average growth rate here, just on the principal that's being added to the account. Well, that fee is going to increase as the portfolio increases. And actually, I don't even think I did this right. No, I did. Okay, because it's increasing each year. All right. After 10 years, this doesn't even include the growth of the portfolio, because the investment fee, these fees are based off of the portfolio balance. You've got a grand total after 10 years, $23,250 in fees. That's more than double the commissions of the whole life policy. And you're going to make the argument that this is all about commissions when selling whole life insurance? That's ridiculous. It can be anyways. Again, if we're talking about people who don't know what they're doing and they are being sleazy salesmen, doing 100% base premium, okay. But when you do this right, the commissions are very low. Now let's add this a 7% average rate of return to our portfolio. And after 10 years, look at this, guys. It's more than triple. You've paid more than triple than the whole life fees in this investment account on just a 1% fee. So this argument about commissions on whole life policies, really? Over the long run, you're going to pay way more in investment fees, guys. So I know people, some people they don't like looking at the actual numbers here, but they are what they are. It is what it is. So I'll go ahead and wrap up with that. I need to reiterate on the commission thing. Like, there are bad agents out there that will do these high base premium policies and just completely screw people over. I get it. That is something you absolutely need to watch out for. But when you do this right, commissions are very low. It can provide an incredible amount of benefit to your life. Just comes down to whether or not it makes sense for you. What are you trying to accomplish? Right? And what strategies and vehicles and assets are going to help you get there. That's all. So anyways, I hope that was helpful, guys. I know it's a longer video, but I wanted to be thorough on this so that you guys have the full picture. You've heard the full story. And now maybe you continue your research, continue going down the rabbit hole on dividend paying whole life insurance, infinite banking, whatever it is, and make an informed decision. All right. Just hear the full story, guys. That's it. So anyways, hope that was helpful, guys. If you have any questions, drop them down in the comment section below. Make sure you take advantage of all the additional free training tools and resources that I have for you in the description. All these things are, I'm just sharing my wealth building journey. They've made a profound difference in my life. Maybe it can make a difference in yours. So make sure you take advantage of those, and I will talk to you in the next one. Cheers, success. Matty Ice is out.